Welcome to my YouTube channel. Make sure to subscribe, like, share and comment. If you're new here, this channel covers one thing: how technology and AI are quietly rewriting the rules of real estate. In this video, I'm going to walk you through the specific AI platforms, data intelligence tools, and market reading systems that sophisticated investors rely on, tools that don't show up in mainstream conversations, and that most agents have never heard of. By the end of this video, you'll know exactly which platforms to explore, what data they pull, and how to start applying this intelligence to your own investment decisions, whether you're buying your first rental or managing a growing portfolio. If that's the kind of edge you came here for, hit subscribe. We break this stuff down every single week. Now, let's get into it. What if I told you that right now, while you're scrolling Zillow and guessing which neighborhoods are up and coming, a small circle of high net worth real estate investors are running predictive AI models that tell them, with startling accuracy, exactly where prices will spike in the next 18 months. These aren't hedge funds with armies of analysts. They're individual investors who found the right tools, set them up once, and let the data do the heavy lifting. The gap between what they know and what the average buyer knows isn't luck, it's technology. And today, we're going to close that gap. Here's the situation in plain numbers. According to a 2024 PropTech Pulse report by the Urban Land Institute, investors who actively use AI-driven data tools are making acquisition decisions up to 3.4 times faster than those relying on traditional market research, and with significantly fewer failed deals. The real estate market has never produced more data. Rental demand signals, migration patterns, school district scores, permit filings, zoning changes, flood risk overlays, demographic shifts, it's all out there. The problem isn't access. The problem is that most people don't know the tools that aggregate, clean, and interpret this data in real time. For most buyers and even experienced agents, market research still looks like this. Check Zillow for comps, look at days on market, maybe pull up a local price trend graph, and make a call based on gut instinct and what a friend told them at dinner. That approach worked fine when markets moved slowly. But in today's environment, where a neighborhood can go from overlooked to overpriced in 18 months, gut instinct alone is too slow and too expensive. What separates elite investors isn't capital. Several of the sharpest PropTech-driven investors I've studied started with a single property. What separates them is information asymmetry. They see things earlier, understand them faster, and act with conviction while everyone else is still debating whether it's a good time to buy. That asymmetry is built, tool by tool, with the platforms we're. Let's start with what most people think they already have, a property valuation tool. You know the automated estimates on Zillow and Redfin. They're fine for casual browsing. But House Canary operates at a completely different level. It ingests over 40 years of historical transaction data, hyperlocal economic indicators, and real-time market velocity to generate valuations, with a reported median absolute error of just 2.5% on single-family homes. That's not a small number. For a $400,000 property, a 2.5% error margin means you're within $10,000. For serious acquisition decisions, that's genuinely useful. But the real power of House Canary isn't just the valuation model. It's the forecast layer. The platform generates neighborhood-level price projections 3, 6, and 12 months forward. Investors use this to identify markets where current prices are still below the model's projected ceiling, meaning there's room to buy in before the curve steepens. It's not magic. It's machine learning applied to the right inputs. Tool number 2, MASHVISOR. The next tool solves a question that trips up almost every new investor. Should I run this as a short-term rental or a long-term rental? Most people guess. MashVisor answers with data. MashVisor pulls live Airbnb occupancy rates, nightly pricing data, and long-term rental comps for any given address or postcode, then runs a side-by-side income projection so you can see exactly which strategy produces better cash flow, and under what conditions. For investors operating in short-term rental-friendly markets like Nashville, Scottsdale, or Cape Town, this is the difference between buying a property that earns 9% annually versus one that earns 14%. The platform also flags neighborhoods where local regulation is trending toward Airbnb restrictions, so you don't buy into a strategy that gets legally closed off 6 months later. That's the kind of forward intelligence that used to require a property manager with 10 years of local experience. Tool number 3, ATTOM Data Solutions. If House Canary is the valuation engine and MashVisor is the cash flow modeler, Atom Data Solutions is the intelligence layer that feeds both, and dozens of other platforms. Atom aggregates data on over 155 million US properties, including deed history, mortgage records, tax assessments, foreclosure filings, neighborhood school rankings, and environmental risk data. What investors use Atom for is finding signals before they become trends. One specific use case: Atom's pre-foreclosure data lets you identify properties entering financial distress months before they hit the MLS. In a market where inventory is tight, knowing about motivated sellers before everyone else is significant. Some of the best acquisition deals happen because an investor reached out to a homeowner in pre-foreclosure before the property ever reached auction. Atom makes that kind of sourcing systematic rather than lucky. Here's something that doesn't get talked about enough: finding a good deal is only half the equation. The other half is executing fast enough to capture it. And that's where most individual investors lose to more organized players. Simply is a CRM built specifically for real estate investors, and its newer AI features are genuinely useful. The platform can automatically score inbound leads by deal potential, sequence follow-up communications based on where a seller is in their decision-making journey, and flag deals that statistically match your buying criteria. Think of it as a sales pipeline with a built-in analyst. For investors doing any kind of volume, even just 2 to 4 deals a year, the time saved on manual follow-up alone pays for the platform. And because it integrates with skip tracing and direct mail tools, it creates an end-to-end acquisition. Tool number 5, PARCL Labs. This is the one most people haven't heard of, and the one I'd argue is the most interesting. PARCL Labs is a real estate data and analytics company that built its platform specifically for institutional-grade market intelligence at the neighborhood level. Their data model tracks rental prices, inventory velocity, demand-supply imbalance, and migration inflows on what they call a PARCL level, a hyperlocal geographic unit smaller than a city but larger than a single block. Here's why this matters. Aggregate city-level data can be deeply misleading. You might read that Austin home prices dropped 4% this quarter. But within Austin, there are PARCL levels where prices are still rising, because an Amazon distribution center opened nearby, or a new transit line is under construction, or a specific school district just got a significant rating upgrade. PARCL Labs gives you that granularity. In a 2023 internal case study, investors using PARCL's neighborhood-level rent velocity data identified 11 emerging rental markets 9 months before those markets appeared in mainstream media coverage. That is the definition of information asymmetry working in your favor. Section 5, Practical Application. So how do you actually start using these tools? Here's a practical framework, and you don't need to adopt all 5 platforms at once. Step 1. Start with your investment thesis. Before you open any platform, define your criteria. Are you targeting single-family rentals under $350,000? Multi-family in secondary cities? Short-term vacation markets? Your thesis determines which tool you prioritize first. Step 2. Run a market scan with House Canary or PARCL Labs. Choose a metro area or neighborhood you're interested in. Pull the 12-month price forecast and rent velocity data. You're looking for markets where rental demand is rising faster than inventory. That's the sweet spot. Step 3. Run your cash flow scenarios in Mashvisor. Once you've identified a promising market, pull specific streets or postcodes into Mashvisor and model your short-term versus long-term returns. This takes about 20 minutes and replaces what a consultant would charge you hundreds to do. Step 4. Source deals with Atom. Set up a pre-foreclosure alert in Atom for your target market. When a property enters distress, you get notified, and you can reach out directly before it hits the open market. Step 5. Manage your pipeline in Simply. As leads come in, score them, sequence your outreach, and track your conversion. The investors who close consistently aren't necessarily finding more deals, they're losing fewer of the ones they find. You don't need all 5 tools on day 1. Start with 2, House Canary for valuation intelligence and PARCL Labs for market scanning, and build your stack from there as your deal flow grows. Section 6, Mistakes to avoid. Before you go and subscribe to every platform I just mentioned, here are 3 mistakes that will undermine everything. Mistake number 1. Treating AI output as a decision, not an input. No tool, not House Canary, not PARCL Labs, not any automated valuation model, replaces physical due diligence. These platforms are extraordinarily good at surfacing where to look and what to look for. They are not a substitute for walking a property, speaking to local agents, or understanding neighborhood-specific context. Investors who automate their thinking, rather than using automation to sharpen their thinking, make expensive mistakes that data didn't cause and data can't fix. Mistake number 2, using only lagging indicators. Mainstream data sources, including most national reports and even many popular PropTech tools, are reporting on what already happened. If you're making acquisition decisions based on last quarter's data, you're reacting, not anticipating. The tools I covered today are valuable specifically because they include forward-looking signals. Make sure the data you're trusting is predictive, not just historical. Mistake number 3, building a stack without a strategy. Subscribing to 5 platforms and not having a clear investment thesis is expensive and disorienting. Each of these tools produces enormous amounts of information, and without a clear filter, that information becomes noise rather than signal. Define your strategy first, then choose the 1 or 2 tools that directly serve that strategy. Add complexity as your portfolio and your process mature. Then choose the 1 or 2 tools that directly serve that strategy. Add complexity as your portfolio and your process mature. Here's what we covered today, your 3-sentence summary. First, the most successful individual real estate investors are operating with a significant information advantage, built on AI and data platforms that most buyers and agents have never explored, tools like House Canary, Parcel Labs, Mashvisor, Atom, and RE Simply. Second, these tools don't require a finance background or a large portfolio to use. They require a clear investment thesis and a willingness to let data inform your decisions before you commit capital. Third, the gap between what you know and what the market knows is closable, and it starts with building the right data stack, 1 tool at a time. If this gave you a new perspective on how technology can sharpen your investment edge, hit subscribe, and click the bell so you don't miss what's coming. We publish new PropTech deep dives every single week. If you want to go deeper, including a full resource guide, tool comparison breakdown, and our step-by-step investor tech stack guide, head over to www.worksbyalexander.com. Everything is there, and we update it regularly. And if you want to see this kind of analysis applied to a specific market, the next video is on AI tools for identifying emerging African real estate markets before the capital wave hits. If that's on your radar, that video is coming up next. Don't sleep on it.